Hi, I'm Chris Wagner, a wealth advisor at Vector Wealth Management. As we close the chapter on 2024 and step into 25, it's a great time to plan, reflect, and set up a foundation for a financially strong year ahead. The first thing I'd like to talk about is if you turn 73 in 2025, that will be the first year in which you're required to take a distribution from your pre-tax account, an IRA, a 401k, a simple plan. Those are called required minimum distributions. And the IRS requires that you take out a percentage of the money from that account, pay the tax on it, and then either live on it, reinvest it, whatever you want to do with it. So in 2025, this will be the first year in which you're required to take one. And then every year after that, you're required to take one. And the percentage and amount will change as the account fluctuates and as you get a little bit older. But just keep in mind that if you have one of those accounts next year, you would be required to take a distribution. And you should consult your advisor as to the plan for when should that come out. It just needs to come out of the accounts by the end of the year, so 12/31. You actually technically have until April 15th of the following year, given this will be your first year of having it. If you are over the age of 70 and a half, you are eligible to start writing or taking qualified charitable distributions from your IRA, meaning you can either write a check with a checkbook that you get set up with, or you can just have money sent directly from the account to a charity. Basically, what you do is you take money from one of these pre-tax accounts and you want it to go to charity. You send that money directly to charity. That money comes out of this pre-tax account. Normally, you would have to pay tax on it, but because it's going to a qualified charitable organization, you do not have to pay tax on it. And so if you're over 70 and a half, you can start to do that. And then if you're 73 and you have your first required distribution, a portion of that, or all of it, depending on the amount, can also go towards charities. So if you're required to take out $25,000 next year, you could say, I want $12,000 to go to charity, and I want the other $13,000 to come to me. On your tax return, $12,000 would not be taxable. Only $13,000 of that $25,000 would be taxable in that example. And so that's where, if you are charitably inclined, it's a great way to reduce the taxable part of your RMD, as well as accomplish giving to charity. The other thing to think about is Roth conversions. As we see it right now, the tax laws that we know it, that are in law currently, are set to sunset at the end of 2025. Those could get extended, but as we know today, there are some opportunities, if those don't get extended, to do some Roth conversions, meaning you take some money out of an IRA, you pay the tax, you move it into a Roth IRA, and you never have to pay tax on it again based on current tax laws. And so for a lot of individuals, it's a great strategy to do. And it's all about how much tax are you comfortable paying? How much should we do? What are the benefits? What are the drawbacks of doing this? Things like that. And so having those conversations with your advisor is a great thing to consider in 2025. The other thing we always recommend is just sitting down and reviewing your beneficiary designations. So just making sure you know, okay, my IRA account is set to go to my husband, and then it's set to go to my two kids, or my IRA account's all going to charity, and making sure those charities are how you want it. My trust still says it should go here. My house still goes here. So just looking at everything, making sure you understand where your assets go should something happen to you, is always a great thing to do at the start of the year, or as you have an annual review meeting with your advisor. The next thing is gift planning. So in 2024, you could gift up to $18,000 per person without having to claim that on your taxes. In 2025, that amount increased. Now it'll be $19,000. So if you like to gift and you like to maximize the amount you can give without having to file a gift tax form, it is now $19,000. And so figuring out how that works in your financial picture is important going into 2025. And then the only other thing is, if you are charitably inclined and you aren't 70 and a half, the other great tool to use is a donor advised fund. These are great ways for you to put money into an account, get the tax deduction in 2025, but then you have the ability to gift that to charities over a number of years. So you get tax deduction 1 year, but then can gift it out of that to the different organizations however long you want to. And so seeing how a gifting strategy into a donor advised fund may fit your charitable Wishes and financial plan is another thing to just talk to your financial advisor about in 2025. And other things are maximizing an HSA. The HSA limit did increase, so now for an individual, you can put in $4,300. For a family, you can put in $8,550. And then if you are over the age of 55, you can put in a catch-up contribution of $1,000 per person. It's crazy to think that the end of the year of 2024 is here, but a lot of fun, exciting planning opportunities going into 2025. And so thank you all for your time, and hopefully you all found this very helpful. If you have any questions, feel free to reach out to me directly. My name again is Chris Wagner. I'm a wealth advisor at Vector. You can call us at 612-378-7560, or you can email me at cwagner@vectorwealth.com.
Hey, thanks for listening to our podcast. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific